Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free video report for Tuesday, February 23rd, 2016. Markets have been pretty much doing as we expected, and I'll go over all of that tonight and kind of what we see going forward. So let's get started. At Sentiment Timing, we believe that human beings in the markets are irrational. There's always going to be an irrational element at work, and that is what creates market opportunities. Now, we find these market opportunities through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators, and then our regular technical analysis. And these dates that are projected, they're not always going to be 100% correct, but what they're going to do is give you a good idea as far as whether it is safe to be buying, shorting, or just staying neutral on the markets. And it's which I'll show you in some of the slides tonight. Even when these dates are not exactly on the exact date, it doesn't mean that just because it's extending that it's safe to be either going long or short. And you'll see usually within a couple days the market does go in a direction that is projected. So our market timing matrix is the time, which is when to expect a reversal in trend. That's through the technical timing indicators that Woody has. From then, we then back it through sentiment. We want to see how traders are feeling about the current trend. Typically, what happens is when we're expecting reversal to the downside, we're going to see everybody get very, very bullish on the markets. And we were able to look at that through our sentiment data. And then from there, we look at price, and we want to see what technicals are doing. Are they throwing off bearish divergences? Are they at resistance? Are they showing bullish divergences? Are they at support? And that's kind of how we pinpoint where price is going to be. So really with the sentiment part of it is when the markets are moving up, you get these people that run into the euphoria end of things, and if they're running towards a technical turn date that's to the downside, this is where you want to be shorting. When you get to capitulation and everybody is bearish on the markets like we just saw a couple weeks ago, that's really where you want to be looking to buy the markets, and they want to line up with the time aspect of things as well as the technical divergences that are in place. So what I want to do is just recap a little things, and this is going back to the January 25th newsletter. And what was originally said was on the 19th there was an alert sent out saying there was 0% bullish sentiment, and that we were looking at this price plunge that took off on the 20th that was going to be an important low. So from there, we were then anticipating. So again, this is going in, the upside was going to last into the 26th or 27th. And again, this is recapping a lot of stuff. These dates were actually sent out in early January, but this is the recap from January. So we were looking for upside into the 26th, 27th before we were going to get setbacks into February 5th to the 8th, and then we were going to get strength heading into the 25th. So this is almost a month, and this is the roadmap that was put out. And the reason why I'm showing you is because I want to show you how things played out. So this was the important low where we had 0% bullish reading. We got a rally, and this was the 27th. So this is the anticipated turn down, which we did get, but we got a spike higher. And this is what I mean by just because this wasn't the exact top, this came in at 1920. We took it out, and it actually was because the weekend went through, and it went into right around, I think it was the 1st. But the thing is, though, even though we were heading higher here, did it make it safe to buy? No. We had sentiment that was at extreme bullish readings, and we knew that the market was supposed to be turning down into the 8th. So anybody that bought this rally here got snookered, and we saw the market drop into the eighth. Now, again, just because the market wasn't the exact low right here, we did get a nice rally off of it, but then we plunged down on it. Again, it was only within 20 points and within 2 days of when it was supposed to take place. And if you shorted this like everybody was, because really the targets that I was seeing was coming in at 1,700 and everything like that, but you knew that the market was supposed to be going up into the 22nd or the 25th. So were you going to use this to buy the bullish sentiment that everybody was, looking higher, or were you going to use this to short where everybody was shorting and looking at 1,700 when you knew the market was supposed to be heading up and you knew it was supposed to be heading down? And this is what I mean by, these dates may not be exactly right, but they're also forecasted usually a month in advance. And you just know when these dates are, that even if it comes down, you want to be using this to buy, and it was right at support here, and we had a nice move up, and this move right here came very close to where the moving average was, which was resistance, and we had bearish divergences in place. So here we had bullish divergences. So again, do you really want to be shorting this with everybody, or do you want to be buying? And here we had bearish divergences when we were expecting the market go down, and everybody was bullish on the markets. So again, these dates are not going to be exactly right all the time, but you're going to know, even if it's not on the exact date, that you want to be shorting this move or you want to be buying this move until the anticipated next move. So again, this is going all the way back to the 25th. And here's our February 22nd to the 25th. And that's not a bad roadmap for somebody to see ahead of time as far as how to, really move your portfolio in the direction that is that's anticipated that's going to show up. So we sent this out today, and it was before the market opened that we had a 91% bullish sentiment readings, and that it was not a bad time to be taking your long positions off. And we saw the markets drop again. Now, does it mean that it has to be the exact top? No, we're just saying things are not as safe as they were back when we were looking for this low, and we saw a fantastic rally off of it. So even if we pop up, it's not something you want to buy into, because we're anticipating the market to drop, and we already know when to expect the low. And that's what I mean by knowing what to expect on things. So even if we pop up and it goes into the 25th, we're within our time zone that we're expecting the markets to drop, and you want to be using this to short. You don't want to be buying into it. And then when we get into our next turn date to the upside is when you want to be buying, and that's what I mean. So you know ahead of time when to expect a low. So if we just take a quick look at the S&P here was a rising wedge. We broke through that. There's support right at the 1909 and then the 1893. So this is what the bears need to push through, but we're going to probably get another bounce back up to either test the 1930 or even come up and test this. But again, we have bearish divergences already in place on this move here. We have a bearish rising wedge, and we broke through it. So the markets are not safe to be buying right now. Even if we do head higher, you want to be picking out your spots on where to actually look to short the market and just let this last move go. And that's really the whole basis of what we do is, is it safe to be buying or selling? So we had a very high sentiment reading, and that was from the big rally that we had last week. We had another 91% bullish reading. So we know that people are very, very bullish on this market right now. We know that we are anticipating a turn to the downside. We have bearish divergences, and we have a bearish wedge. So even if we rally up, again, don't buy into it. It's not something you want to do. It's not that maybe an area that you want to get aggressively short, but you want to use rallies to unwind your long positions if you got long, anywhere down here like I did. And then just, look to short and take the next position to the downside until we run into our next reversal date, which we already know ahead of time, and it's been in place for the last 2 weeks. So that's pretty much all I have for tonight, and we are keeping the anybody that signs up for the sentiment timing is going to get a free membership to the Markets Path. I do the nightly video reports, morning notes, whatever trades I'm making, I send out in an email alert. And we also have a trade room. So if you guys are interested, I'm not sure what the special is. I don't even know if they're having a special. But in any case, good luck, and hopefully we see you guys as members, and have a great night.